Hey everybody, and welcome back to Josh Lioce's video blog. Today, we're going to talk about the mortgage rate environment and where it's heading now that we're in 2022. Stay right here. We'll be right back. All right, welcome back. So today we have our very esteemed guest speaker, Rick Scherer, CEO of On2 Mortgage, very good friend of the show's. We're bringing him in today to talk about where we're heading now that it's 2022. Welcome, Rick. Thank you for being here.
Yeah, man. Thank you so much for having me part of this.
So we love having you on. We love getting your insight, and certainly not only for myself, but for our people watching in the audience, right? Our audience on YouTube. We want to know about 2022. Where are we coming? Where are we heading? All that good stuff. Please kind of enlighten us as to where do you see the rates heading now that we're in the new year?
Yeah, that's a great question. And, I'll do my best. If I had a crystal ball, man, we wouldn't be here together. But I think I have a pretty good sense of what's on the horizon. You know, what happened over the last year is really where we saw the lowest rates in history. Rates hit as low as 2.5% on a 30-year fixed. And, we have seen mortgage rates climb over the last 6 to 12 months. We're sitting right around that 3%, plus range. What I see for 2022 is probably trending somewhere between 3.25% and 3.5%. Now it's weird, right? Because we've been spoiled by such low interest rates. But just to put this in perspective, I've been, in the mortgage industry for about 20 years. And before COVID, the lowest rate I ever gave was 3.25%, right? So, we're still going to be doing great. It's still, affordable mortgages. And I do think that we'll have a little bit of room to run here higher as the government stops artificially keeping mortgage rates low.
So one question I have is when you see rates start to climb like this, what does that typically mean for the economy in general? Like what are the signals from seeing those rates start to rise?
Yeah, historically, it means that the economy is actually doing a little bit better. The Fed, who has lately been controlling mortgage interest rates, as the economy starts to get better, inflation starts to move higher. The government uses the Fed funds rate, the prime rate of interest, to really control that. But with higher inflation comes higher mortgage rates. Really, the mechanics behind it is mortgage loans or the mortgage interest rates are tied to the bond market. The bond market hates inflation. So when inflation moves higher, mortgage rates, the value of a bond erodes and mortgage rates move a little higher. Again, I don't think we're going to see 4% and 5%, but we're going to see a little bit higher than we've seen in the past.
Now, as we closed out 2022, I did see some announcements around FHA loans. Can you kind of share with us what some of those announcements were? What does that mean for, buyers who are FHA buyers going into 2022?
Yeah, so one of the biggest differences with the mortgage, with the FHA loans and actually conventional mortgages altogether is the loan limits have increased. So what they do is they do a census on mortgage values, and then they start to move those loan amounts higher. So places like locally, in the Worcester market where it's been hard to get a mortgage because it was a lower number, that has now increased. And across, greater Boston and some of the counties that surround Suffolk County, those have all increased too. So that's really been the biggest difference in the FHA and the conventional, is really seeing those conventional loan limits move higher in creating lower money down and higher loan amounts.
Well, it's really good to hear because obviously one of the hardest things in this market is that inventory issue, right? So people being able to get approved for a higher number, and certainly rates still being extremely low, it still remains a very good time to be in the market to purchase a home. So all good news. Any other insights you want to share before we wrap up?
Yeah, we are utilizing a lot of low money down programs. Sometimes when I talk to people about this, they say, oh, here we go again, right? 2007, 2008. That's not the case. So low money down, we're utilizing a lot of it is because rents are so high and people aren't able to accumulate the down payment. However, they've got great paying jobs, right? They can afford the payment, no problem. So we're seeing jumbo loans, 5% to $1 million, with the client's debt to income ratio at like 20%, which is really, really conservative. So we are seeing a lot of low money down programs right now, and we feel it's great because it's allowing people to get out of that rental market, get into a home buying by putting less than 20% down. So if you are in the market or know anybody in the market and they talk about, I need to put 20% down, it's just not the case. Definitely reach out to a mortgage expert and they can walk you through it.
Awesome stuff as always, my friend. If someone wants to reach out to you about the programs that you were just talking about, or any program, how would they get in touch with you? What's the best way?
Yeah, absolutely. Feel free to reach out to the team, 617-778-0024. And my email address is rick@ontomortgage.com.
Awesome, buddy. Thank you so much for being here. And thank you to everyone who always watches these videos. There's always great questions and comments that come around our videos. We try to provide great content, and Rick is a sponsor and a great friend of the show. So thank you for being here, and thank you for watching. Hope you guys have a great start to your 2022, and we'll see you next time on Josh Lioce's video blog.